Hello, everyone. Thanks for joining me. This is Kevin Burgess. We're going to go over two things today on this video, and it's going to be a great video today, I believe. We're going to talk about the dividends that I received in November of 2021. We'll go through each company and show the dividends that I received in both my portfolios, the dividend growth portfolio and the dividend yield portfolio. Then secondly, I had a question from a viewer named Luis. Luis wanted to know more about the Dividend Aristocrats and also specifically about McCormick and Company. So we're going to go over both of those. We will talk about the Dividend Aristocrats, not the Dividend Aristocats. So just wanted to make sure that we were clear on that. And so without further ado, let's get started. And by the way, grab your favorite hot beverage. And then we can move forward. Welcome to Dividend Growth Investing with Kevin Burgess. Dividend growth investing is not about chasing yield. It is a thoughtful investing strategy. Dividend growth investing protects me from making poor decisions by taking some of the emotion out of the investing process. The strategy is to invest in quality companies with consistent growing dividends with large moats. And it keeps me invested in the market. If you like this content, please like this video and subscribe to my channel. It means so much to me. Now let's get started. Just a refresher, here's my portfolio. Balance is $672,518. And as you will recall, I break this down into two portfolios. I'll show you each of those. But on overall, on average, I have a yield on cost of 3.23%. And again, it's important to remember I started the high yield portfolio in April of this year, and I started the high growth portfolio in August of this year. So this is not a super long runway. But you can see that the dividend growth looks like it's going to be, on average about 7.7%. So let's show the two portfolios. Here's the growth portfolio. This growth portfolio is actually located in my 401k and is therefore a tax deferred account. So you can see that the yield on it is 2.66. Dividend growth is about 8.8%. It's about 520,000. When I look at my high yield portfolio, this is in an after-tax account, and so I'm actually getting those dividends and reinvesting those from a after-tax account. The balance of that is 150, almost 152,000. Yield is about 5.17%, and dividend growth is 5.6%. So that's just an overview of the portfolios that I have. So now let's go into my dividends that I received in November. Hopefully you can see this. The dividend that we'll start with the dividend yield portfolio. This is the one that's in the after-tax account. You can see that on November 1st, I got Campbell Soup dividend. I had 40 shares on the before the ex-dividend date. So I may actually own more shares than that now, but at the ex-dividend date, I no longer get those dividends for that quarter. Those go to the person who owned them before me. So it's important to know that the ex-dividend date is something you want to look at when you're buying shares to know when you're going to get those dividends. So I had 40 shares, got 37 cents per share, or $14.80 in dividends. The next also came November 1st, General Mills, 40 shares and 51 cents per share, which is a $20.40. Also November 1st, I got Verizon. Now Verizon's got a higher yield, 170 shares at 64 cents per share, so I get $108.80. So with that, then November 12th, I got Hess Midstream, 500 shares at 0.5104. This is also a high yield stock for me. It's $255.20. Then AbbVie, 75 shares. This is on the 15th at $1.30. Ended up with $97.50. Also on the 15th came Kinder Morgan, ticker KMI. I had 233 shares before the ex-dividend date, 27 cents per share for $62.91. And then also on the 15th, Main Street Capital, 180 shares at 21 cents for $37.80. And in total, for my dividend yield portfolio in November, I had $597.41. So moving on to the growth portfolio, on November the 3rd, I got Lowe's, 60 shares at 80 cents or $48. On November the 8th, Air Products, 80 shares at $1.50, gave me $120. Apple, which I only have 5 shares. I wish I had a lot more than that, but I have 5 shares of that at 22 cents. So I got $1.10. And then General Dynamics, I had 50 shares, $1.19 per share, ended up with $59.50 for a total of $228.60. So those are the dividends that I got in November. Might be interesting to look at what the dividends are going to look like coming up in December. You can tell this is the Simply Safe Dividends app that I use. You can see that I've got Chevron, IBM, Exxon, Consolidated Edison, Kellogg's, Maine, Prudential, and Lockheed Martin still on tap on my high yield portfolio coming in December. December is a big month for me. And also on the high growth portfolio, we can see that I have Microsoft actually coming in today, IBM, Snap-on Tools, Atmos Energy, Stepan, Tyson, and Whirlpool all pay on the 15th. Then community bank shares on the 17th, Black & Decker on the 21st, and Lockheed Martin on the 27th. You'll notice that I have Lockheed Martin in both my high yield as well as my high growth portfolio. And it happened to be that as they came down in price, I do see them as a long-term growth opportunity. But when they came down in price, they actually met the criteria for my high yield account. So I purchased it in both. I think it's a good investment, and so I think it's worthwhile. Also, you can see here on the income calendar for the year ahead, I have 2 big months every quarter. It's the second and third month every quarter. You can see this is the high yield portfolio. I'm expecting $847 in December, but only $246 in January. Then back to $866 and then to $848 in the high yield portfolio. So let's look back at the high growth portfolio. You can see that it's a little different, actually. I've got a lot of dividends coming in December, less in January, and even less in February. So they're heavily weighted toward the third month of the quarter. But that's okay because I'm not living on these dividends at all. So I'm picking high growth stocks, and the distribution of dividends is not that important in this account. So I got $826 in dividends in the month of November, and you saw each of those. I'm looking forward to the December number. That's going to be probably the biggest that I've had so far. And hopefully this is helpful to you. If it is, let me know in the comments below if it's something you want to see on a monthly basis, and I will continue to do this type of content. Now let's move on to Dividend Aristocrats. Okay, let's take a look at Dividend Aristocrats. Just to give you some background, there's 3 categories. There's Dividend Achievers. Those Dividend Achievers have paid consistent dividends over the past 10 years. There's Dividend Aristocrats who have paid consistent dividends over the last 25 years. And Dividend Kings have paid dividends over the last 50 years. A point to bring out, and at least for my portfolio, I don't invest in either Achievers, Aristocrats, or Kings just because they're in that category. I invest in them because they fit my strategy. So there's some of these aristocrats that I will have in my portfolio, some that I will not. So let's just take a quick look at some areas here. We've got, obviously a bunch of different sectors, but let's say that you wanted to get a high yield dividend aristocrat. AT&T has been paying dividends for at least the last 25 years, and their yield is actually pretty high at 9.05%. And then obviously this is my app called Simply Safe Dividends. They have them rated as unsafe with a score of 40, and it appears speculative. So that one I have chosen to stay away from, mainly because of the dividend safety. You can see that their growth also is very slow. ExxonMobil, 5.67%, IBM, 5.37. So if your strategy is about dividend yield, you can come to these dividend aristocrats, look at the higher yield ones, and determine if those fit into your portfolio strategy, and obviously make sure you're diversified as well. So let's take a look then at dividend growth. The highest one is Lowe's. I actually own some Lowe's. Target is also going up very fast. I don't own Target. Cintas, Abbott Labs, Sherwin-Williams. These are high growth dividend aristocrats here. So those, if your strategy and your goal is about growing dividends quickly, obviously your dividend yield would start out lower, but your growth would happen. So if you've got a longer term perspective, these might be of interest to you. So that's a quick overview, and you can tell there's about 65 companies in the Dividend Aristocrats. Just to give you a sense, obviously Dividend Kings is a lot smaller portfolio, or a lot smaller list. It has 32 companies in it, and the Dividend Achievers is obviously bigger, and it has 224 companies in it. So, if you're looking for a good place to start building your portfolio, these are great lists to look at, because these companies have been stalwarts, and they've been very good companies to own over the last 50 to 25 to 10 years. And so those are the kind of companies you want to look at first in terms of building your portfolio. I had a listener named Luis ask if I would specifically go over the McCormick Company. So Luis, thank you for that question. I really appreciate it. If any of you have questions that you have for me, simply just put them in the notes below. I'll respond to each one, and sometimes even make a video on it. So just to quickly go over McCormick and Company, if you don't know who they are, let's look at their brands. They obviously have some strong brands. They're in the spice category. One of my favorites is Frank's Red Hot, because of the commercials. They put that bleep on everything. So this is, they got some really strong brands and a strong company. So let's look at some of the financial numbers. From a dividend safety perspective, they get a score of 80, which is really good. Their dividend yield is a bit low at 1.67, but look at that dividend growth at 8.8%. Really nice. So then we look at things like we'll look at some of these in detail a little bit later. Their annual dividends per share, I mean, look at that. They're an aristocrat. So they've been growing for the last 34 years. They've paid a dividend. And interestingly, in the last 34 years, they've also grown their dividend. So it's a strong company, solid performance. You can see some of the dividend information there. From a valuation perspective, their yield and the PE ratio are pretty similar to their historical. And then let's look at the payout ratios here. Those look pretty good. From an earnings per share perspective, you can see that they've been up and to the right for the last, at least 10 years. One thing that is a bit interesting is that it looks like they may be falling off just a slight bit in the next 12 months. The free cash flow seems to also be falling off. Earnings per share growth is good. Shares outstanding, they've been pretty consistent. They obviously don't have a strong buyback program. And, with their growth, maybe they don't need that. Their sales are up and to the right, which is good. The operating margin is pretty strong. And then last thing I look at is in terms of debt, 55% debt to capital is not too bad. Their interest coverage ratio is 8, which is about where we would want that to be. So from a financial perspective, they look pretty strong. Let's now go to Seeking Alpha. And if we look at their dividend rating, their dividend safety is good. Their dividend growth is good. Their dividend yield, however, as we saw, is pretty low. And their consistency, being the last 34 years that they have, both paid and grown their dividend over time is really good. So, but let's look at the business growth here in Seeking Alpha. They get a D minus basically, and so you can see all of the components that make that up. But so that's something that we would need to take into account. One other thing to look at is what is the value of McCormick. And here it is. So we have the last close was at 88.65, but they are calculating the fair value at $58. So it seems maybe a little bit overpriced, right? And so let's go and check that out over on Fast Graphs. And as we can see over the last 8 years, the price appears to be above where they've even traded over the last 8 years. So, just overall, looks like they may be overpriced from my perspective. And interestingly, let's look at the forecasting. And you can see that there's not a ton of growth forecasted for McCormick. So I'm not really sure, other than just, being a solid company and their strong brands and their consistency over the last 34 years obviously demands a bit of a premium. I'm not really sure if it demands this much of a premium from my perspective for my portfolio. So all of that being said, I think McCormick is a strong company. I think, if I owned them, I would not sell them. But at this point, looks to be a little overvalued to me from my perspective. So hopefully that's helpful. And Luis, again, thank you for the question. I appreciate it. So that wraps up today's video. Thanks for joining me. As always, I'm not a professional investment advisor. So everything that you saw here today is for your entertainment purposes only. If you've got any questions or if you want to know more about anything that I've talked about here today, just leave me a note below and I'll be glad to respond to you. With that, I bid you a good day.